Hello everyone and welcome back to Sudden Wealth. I hope you guys are doing very well. If you do enjoy the content, please consider dropping that like and subscribe. It greatly helps the channel. So another day here during my holidays. I wanted to bring something to your attention. So that's why I was basically considering making this video, because I saw a lot of questions around this. So I thought, look, let's make a video. I think it makes it easier. By the way, if you do enjoy the content, please consider dropping that like and subscribe. As you guys know, it's the only thing that I ask. Now, there's been a lot of talk about how all the inflation created was corporate gouging, right? So basically, corporates decided to essentially come up and create all sorts of pressures in prices. They just decided to basically, increase prices and start gouging their consumers for, just because they're greedy, right? So this is the narrative. They came out to basically explore the people, and basically that's what created the whole high-level inflation. And so there's nothing to blame about the Democrats. Now, in my view, there's both blame Trump and the Democrats, which is if you close down supply and then you give money directly to people, you have inflation. I mean, it's really that simple. So that is my point when, for example, when I mentioned that you can lower interest rates and have no inflation, and that's been the case for a long time, as long as you have the banks as gatekeepers, you have asset price inflation, but you don't have CPI inflation. But if you give money directly to people, and in many cases more money for not working than they had when they were working, and you reduce massively the supply at the same time, then for sure you can have high inflation. This is where, for example, Peter Schiff is wrong, in the sense that he says, oh no, we are now paying the inflation created with all the QE between 2010 and 2020. That's not true. That's not how inflation works. Inflation doesn't take 10 years to be seen. It's very automatic. So for example, we engaged with the inflationary measures of giving money directly to people and a big stop or a big slowdown in supply, and you have inflation 1.5 years later. It doesn't take 10 years, it takes 1.5 years later. Now, the thing that surprises me the most about this corporate gouging is because in the US it's even more obvious. So in the US you have CPI, which is the price that me and you pay. And then you have the PPI, which is the price that corporations pay. The PPI overall, if you compare the PPI to the CPI, has been, for a long time it was, larger than the CPI. That means that companies were absorbing some of the costs, and because they believed that it was going to be transitory, they actually absorbed a lot of higher costs themselves and sold things not so much expensive. Even if you compare it, all the PPI numbers and all the CPI numbers, PPI overall has increased more than CPI, which means that all in all, corporations as a global absorbed more of the costs than what they passed to the consumers. Obviously, once they realize that this is not transitory, they start trying to make up for lost ground. But the point is the same. If you reduce supply and you give money to people, I mean, don't take my word for it. Check the annual accounts of a big grocery company. I mean, you have revenue and you have costs of goods sold. The margins are very thin. So there's even no room to really, you don't even need to you don't even need to extrapolate what may be the cause of price increases. You can see they are raising their prices so they can keep the same profit margin. They are not tripling and quadrupling their profit margin. That would be gouging, of course. But they're actually either reducing a little bit or increasing it. Instead of trying to destroy people's demand, or by the way, if you do put in price controls, they don't work. And they haven't worked in the US when Nixon tried them, and they haven't worked anywhere else on the planet, because if you put a maximum price of what you can sell certain items, but if the cost of production is higher, then the company simply does not produce it because they would be losing money if they do it. So what you have, long lines, shortages. You create things like black markets. So, I mean, but in any case, this is the level of dishonesty. You actually have PPI. Just compare PPI with CPI and you'll see that there's no corporate gouging going around. But the reason why the government says it, because the alternative is to say, oh yeah, it was my fault, right? They cannot do it, so they will go and say it was the corporations. And think about it, right? So corporations could gouge consumers at any time, right? But for no reason, they woke up one day in the middle of the Biden-Harris administration and they just decide, oh, let's just increase, let's become greedy today. We've been here for decades, we haven't been greedy, but all of a sudden, we just woke up today and just decided to be greedy. Right. By the way, moving now to the markets, I will be disclosing a little bit my positions in later this week. I mean, I've disclosed them over time, but I will do it again in case people are not aware. Coming down to the markets, of course, you have NVIDIA reporting. That places, it pushes a lot the markets forward, particularly because it's one of the leaders in AI. So there's a lot of expectation. So basically, NVIDIA tends to set up the tune for the rest of the results coming out. Now, I had this question, which is, oh, why is Bitcoin crashing, or why is Bitcoin selling, blah, blah, this kind of things. I thought I was actually a bit clear on this, but maybe I wasn't, so let me say this again. I was expecting crypto to start moving upwards a bit more consistently in the second half of August, which I think for the most part has happened. And then last week, I didn't make so many videos, and I said, yeah, I do expect us to be consolidating somewhere between 58 and 62,000, plus minus 1,000, right? These things can go up and down. And we actually expanded a little bit. We went to 64.5, and I think we went to 57. I mean, fine, we are consolidating. We are in the same ranges, and I get it. It tends to be very boring. We all thought, or we were hoping that we're going to be out of this. But to be honest, August and September don't tend to be very good months for crypto. Now, how does Q4 of the halvening years look like? 2012 plus 5%, 2016 plus 55%, 2020 plus 160%. I think Q4 will be very positive for crypto. And I think 2025 will be the real hyper bull market of crypto. Now, I've said this before, I'll say it again. The bull market in crypto has corrections and consolidation phases. And then out of nowhere, you look at the price and it's 70K Bitcoin. Say, oh my God, how is this 70K? It was like 10 days ago, it was 58K. What happened? That's what happens. It moves up more than it moves down, and it moves up aggressively. And the thing is, I think people think, oh, we are in the bull market, particularly newcomers in crypto. They think, oh, we are in the bull market, and they think it's green all the way through. No, it's not green all the way through. I mean, even in 2021, Bitcoin hit 65, went to 29, and then to 69. I mean, we've seen cycles in which Bitcoin has 40% corrections. We've seen cycles where altcoins have 60, 65, 70, even 75% corrections. If you cannot withstand that level of volatility, you're going to be in pain. I mean, there's nothing that I can say. Now, you need to understand, these are risk markets. All of these things can go to zero tomorrow. And you need to live with that. You live in a game of probability. If you think that if you're looking for guarantees and assurances, you are in the wrong place. I mean, and if people are giving those to you, they are feeding you what you want to hear. They are feeding you dopamine. Usually people do that if they want something from you. Since I don't want anything from you, I don't need to play that same game. Bitcoin is and will be steadily moving up. A lot of the sell pressure has been removed, but some of it's still here. I think Q4 will be a very strong quarter. I think Bitcoin will be above 80K by the end of November. And I think the liquidity index is rising at the moment. And one thing that I like to see is Jim Cramer is bearish again. And there's a lot of retail short positions being opened on Bitcoin, which is good. People say, oh no, but the short position pushes the price down, right? No, the shorts, you need a lot of leveraged shorts above the price that you're in. So when the price finally moves up, it cleans up all those traders and they lose everything and they are forced to buy Bitcoin at higher prices. That's what moves the price up. But I've said this, I mean, the reason why I'm making this video is because I've mentioned this, I think, 2 or 3 times last week. We should be in a bit of a channel, probably until the end of this week, somewhere between 58, 62. Can we go to 64, 65? Yes. Can we go to 56, 57? Yes, but we'll spend most of the time between 58 and 62. And then we should start creating the foundation to go up more than down. But that doesn't mean up every single day. That's later in the cycle. You see, a lot of people will get to the hyper bull phase of the market, and this is the phase where we are going up. I don't know, for example, for Bitcoin, we're going up like 7% a week. And people will say, oh my God, I should have accumulated here, I should have accumulated there, I should have done this, I should have done that. And they've not done it, and they feel the pressure to FOMO at higher prices and drop and basically DCA higher as the price moves higher. That's the big mistake. But unfortunately, it happens every cycle. It's the same story over and over again. People don't want Bitcoin at 20,000, they want Bitcoin at 65,000. It's the same Bitcoin, does the same things, has the same properties, and moves under the same fundamentals. However, people like it if there's a green candle behind it, and people hate it if there's a red candle behind it. That's it. And be prepared during the bull market for consolidations, for corrections, for periods of boredom, for periods of disbelief. Even when you start seeing a lot of people talking about the bear market is here again, the bull market is over, that's it, we're not going up from here, we finished, this time is different, these kind of things. As long as you hear these things, it's great. If you get to a point where Coinbase is the number 1 downloaded app in the Android and the Apple Store, when nobody can see another bear market for crypto, when analysts start creating the case of why a bear market will not happen again because of this and that is different, when you see stuff like that, that's when you're in euphoria phase. When you see retail coming in drones, when you see everybody's bullish, nobody doesn't even, it's like they forgot how to spell the word bear. That's when you're approaching the top. We are not even close. But once again, I mean, look, it's up to you, man. But if you follow these channels, they're gonna cook you, because most of their income comes from your views and you buying their stuff, which means every day needs to be a dramatic event. Everything is happening like this. You see, if can you imagine, like Discover Crypto or whatever, they are live now. They have 1 hour and a half program. If they go there and say, yeah, we are consolidating between 58 and 62, we may drop a little bit to 56, 57, or we may overshoot it to 64, 65, 64 and a half. That's it. Takes 10 seconds or 30 seconds. And now what are they going to talk about? How can they sell yourselves to you? They can't. So they won't tell you. So they will come, oh, it's this, it's because people are afraid that this guy has been arrested. Oh no, it's because Ethereum is finished because Vitalik is on holiday. Oh no, it's because there are concerns in the Middle East. But then tomorrow it goes up and say, oh, it's gone up because there's no longer concerns in the Middle East, or because, oh, actually, Vitalik having some time off is good for to clear his mind. You see, the chart will tell them the content, and the idea is for them to provide you with reasons of why this is going up, or this is going down, or this is going sideways. But the point is to extend it, make you listen to it for an hour and a half, make you believe that they really understand a lot of what they're talking about, and hopefully you buy their products. That's the mentality. And with that, guys, thank you very much for your support. Please drop the like and subscribe, and I'll catch you in the next one.